What you'll soon realize is how one tiny financial oversight could obliterate your wealth in today's turbulent markets. As the global landscape shifts, investors are met with both optimism and caution. Stock futures edge higher, reflecting a sustained winning streak, buoyed partly by rising oil prices. However, these seemingly positive trends hide underlying risks that could impact financial planning and investment strategies. Today, we're delving into how these developments in the U.S. stock markets intersect with financial lifestyle decisions you might face. Firstly, the upward movement in futures is underpinned by favorable conditions seen recently in the S&P 500, which is currently up by 0.47%. This index measures the stock performance of 500 large companies listed on stock exchanges in the United States and is often seen as a barometer of the overall market health. The gradual but consistent increase suggests investor confidence, likely spurred by stable economic indicators and encouraging reports from major sectors. However, the rising oil prices cast a shadow over this optimism. With USO up 0.74%, energy costs are poised to increase, affecting both corporate expenses and consumer spending. This creates a complex situation where high investment returns could be countered by increased operational costs and inflationary pressures. The second headline draws our attention to Neurocrine Biosciences, nearing a $2.5 billion deal for biotechnology advancements in obesity disorder treatments. This strategic move by Neurocrine not only emphasizes the company's focus on high-demand medical solutions, but also highlights an ongoing trend, investment fluidity, moving towards biotech and AI integration. Biotech companies are increasingly harnessing AI for drug discovery, patient analysis, and predictive diagnostics, fundamentally altering the landscape of healthcare investments. As a potential investor, understanding these pivots is crucial. It's an indicator of not just where industries are shifting, but where your financial lifestyle could adapt. On a broader scale, Asian markets showed a mostly positive trend amid continuous increases in oil prices, with indices like the Nikkei and Hang Seng experiencing mild gains. While there is a general positive trend, the juxtaposition of rising oil prices presents a dual-edged sword, especially for emerging markets heavily reliant on energy imports. Investors in these regions need to cautiously assess how energy cost fluctuations might influence their portfolios. This situation ties back to a critical financial lifestyle lesson. Geographic and sectoral diversification protects from localized economic turmoil. Next, consider the implications of the Vietnam gig economy, acutely hampered by escalating fuel prices exacerbated by the fallout of the Iran war. Gig workers often operate on thin margins without the buffer of stable contracts, making them especially vulnerable to economic fluctuations. If your financial lifestyle relies heavily on freelance income, this story is a cautionary tale. It's crucial to establish multiple income streams and consider savings or investment strategies that buffer against such vulnerabilities. We've touched on how these market elements intertwine with financial lifestyle choices, but what does this mean for your immediate actions? If you're looking to protect or grow your wealth, it's time for a portfolio checkup. Are your investments diversified enough to weather sectoral shifts? Have you considered the implications of rising commodity prices on your everyday expenses and potential savings? We've covered oil prices, stock market movements, and financial lifestyle considerations. But the pressing question remains, where do you fit within this intricate financial web? As oil prices rise and geopolitical tensions brew, the necessity of agile financial planning becomes ever more pronounced. Your next steps could determine not just resilience, but profitability. It's pivotal to scrutinize where your risks lie. Amidst robust market highs, are there overlooked vulnerabilities? Have you hedged your investments effectively? These market developments form a nuanced picture, one where a singular market move could make or break your financial health. Now ask yourself, how risk-averse are you willing to be in this climate of uncertainty and opportunity? Your approach should balance these dynamics, ensuring that you navigate through potential pitfalls to secure a prosperous financial future. This emergent theme of market fluidity and financial prudence underscores the need for vigilance and adaptability. Keep an eye on news cycles and market analyses, but more importantly, develop a strategic approach that suits your risk tolerance and financial goals. As our discussion wraps up, consider subscribing to our channel. We're committed to delivering timely financial insights to empower your decisions. Like, share, and comment below with your thoughts or questions, and let's embark on this financial journey together.